Gold went up by about 40% during Trump's first term, about 10% a year. Mm-hmm. And so it wasn't like, gold didn't do well when Trump was president. But I think it's actually going to do a lot better, despite what the markets are saying right now. I think the markets are wrong again on this. I think a Trump presidency is very inflationary, but that's not bad for gold because the Fed is not going to fight the inflation. In fact, if it tries, the Trump administration is going to beat up the Fed.
Since the U.S. elections in November 2024, financial markets have generally been performing well. The cryptocurrency market has probably benefited the most from the post-election euphoria. In the days following the election, Bitcoin's price has climbed from less than $70,000 to a new all-time high of $90,000 per coin. Other cryptocurrencies also recorded significant price increases, as did the S&P 500 stock market index, which reached a fresh historical high a few days after the election. While investors are attributing the price boom to the outcome of the elections, analysts caution that elections can only trigger short-term volatility. In the long term, economic fundamentals like corporate earnings, interest rates, and consumer behavior play more significant roles in determining market trends. In a recent interview with David Lynn, economist and popular gold bull Peter Schiff notes that the post-election euphoria, which has adversely impacted gold prices, will be very short-lived, and all the existing economic conditions that contributed to higher gold prices all year long will surface again. Though Schiff loudly supported Trump for president over the Democrats, he has voiced criticism over aspects of Trump's presidency that didn't align with his economic principles. Schiff has been critical of Trump's fiscal policies, particularly the increased national debt and budget deficits during his first term. Despite Trump's promises of fiscal conservatism, Schiff noted that government spending increased significantly, which he argues has long-term negative effects on the economy. He shared those concerns in recent posts made on social media platform X. The U.S. economy has been in a bubble since the Greenspan era of the 1990s, Schiff wrote in one post. Every president since then has relied on the bubble getting bigger to take credit for fake economic growth. Trump's plan is to pump in more air and hope the bubble doesn't pop until after his term ends. In another post, Schiff commented on how government spending rose during Trump's first term. The post reads, "During the first 3 years of Trump's presidency, before COVID, with Republicans controlling both houses of Congress during the first two, government spending rose by about 12.5%, while budget deficits rose by 50%. Given how much higher interest rates are now and how much greater the proposed tax cuts are, the growth rate in both spending and deficits is likely to be much greater during his second term. However, unlike during his first term, a sovereign debt and dollar crisis may define his second." Schiff shares more concerns about the Trump presidency and the impact on gold prices in his interview with Lynn. We will present clips from the interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
We've been kicking the can down the road for a couple of decades now, going from bubble to bubble. And that includes when Trump was president the first time. I remember when I voted for Trump. I was hoping that maybe he would actually be able to cut government, and that, the fact that he wasn't a politician, he would not behave like one. I was wrong on that. But he ran on a platform of cutting government, reducing government spending. He had something called his penny plan. He was going to cut, every year he was president, he was going to cut spending by a penny, 1 penny out of every dollar, which wasn't even enough. But of course, he didn't do that. He ended up increasing spending by 4 cents on the dollar for the first 3 years. That's, not counting COVID. If you count COVID, it was something like 16 cents a year because spending blew up so much in 2020. But even before we got to COVID, government spending was going up under Trump. The deficits he talked about paying off the national debt as a candidate. He ran up a lot of debt. The debt went up 50%. The budget deficits went up 50% in his first 3 years before they, went through the roof during COVID. So he did end up setting the record, which Biden just broke, for the most amount of debt added in one presidential term. So, he expanded government. In fact, even when the Republicans had both houses of Congress, they increased welfare spending in addition to warfare spending. He added a department. He added the Space Force. I mean, he didn't eliminate a single agency or department. And so I think that now we're in much worse shape. The economy is far worse than it was in 2016. That's why he won by a wider margin. And the reason he won the first time, and the reason I predicted he was going to win the first time, and I predicted again, is that I knew the economy was much worse than the media was portraying, and the Federal Reserve and Wall Street. And the same thing is true now. We have a horrible economy beneath the surface. And Trump just showing up is not going to fix these problems. And neither will simply cutting taxes the way he has advocated. Because most of the taxes are not really growth oriented. They're consumption oriented. You're cutting taxes on overtime, on tips, on Social Security benefits. So all this money is just going to be spent. And since we already have record trade deficits, the trade deficit we had last month, merchandise trade deficit, was the worst in history, with the exception of 1 month right after we did the COVID reopening. But we've never been more dependent on imports than we are right now. And if we just give people a bunch of taxes, they're going to spend more money on imports. Now, yes, the imports will get more expensive because Trump is going to put tariffs on those imports. Yeah. But we're still going to import them because we don't have the ability to produce the stuff ourselves. We're just going to have to import more and pay higher prices with the tariffs. But the other problem is the tax cuts are going to blow a big hole in a already more than $2 trillion a year deficit. When Trump came to office in 2016, the annual deficit spending was about $650 billion officially. And when Trump came to office the first time, the Fed funds rate was 0.5%. Now it's 4.5%. And the yield on the 10-year was 2.5. Now it's getting close to 4.5. But rates are moving up a lot higher. So we're going to have much higher interest rates with much bigger debt. And Trump is talking about mass deportations, which I'm all for having a strict border. Most of the jobs created under Biden were for illegals. That's kind of where they came from. And so if we kick them out, who's going to do that work? And what are we going to have to pay Americans to come off of welfare and take those jobs? Yeah, sure. There are some people who are on welfare that will kick out, and there's some criminals, and that'll be good. But I think overall, we're going to actually do more harm because we're going to deplete our labor supply, and that's going to further, drive up the cost of production in the United States.
While Schiff supports the idea of a stronger border, he stresses that authorities must make it easier for hardworking, honest people to immigrate legally. He fears that mass deportation of illegal immigrants, while a very enticing notion, would have an unfortunate impact on the U.S. economy. Deportation of criminals and welfare recipients will be a positive, Schiff wrote in another post, but the overall impact will be a negative. Getting legal Americans to take jobs currently filled by illegals will require much higher wages. That will be good for the workers who take those jobs, but bad for consumers who end up paying much higher prices. During his discussion with David Lynn, Schiff also shares his thoughts on current gold price declines, highlighting why gold is being plummeted while cryptocurrencies like Bitcoin have soared. Despite the price declines, Schiff is resolute that the next 4 years will be very bullish for gold prices. He states as much in another social media post, which reads, "Rising bond yield and sticky inflation continue to weigh on gold. Traders believe this combination is bearish for gold as it will sideline future rate cuts. The problem is that CPI numbers will soon surge as used car prices stop falling. The Fed won't hike. Gold will surge." Let's get back to the interview.
Why doesn't the market like gold on the back of a Trump victory?
Well, because again, everything is risk on, right? Gold is risk off. So people think the U.S. economy is going to boom. The stock market's going to boom. Why do I want to own a safe haven like gold when I can make a fortune in the stock market in this booming economy? They also think that the strong economy is going to mitigate the rate cuts, so we won't get as many rate cuts as the market might have thought. So they think that higher interest rates is a negative for gold. Yeah. Also supporting the dollar. We've had a big rally in the dollar since Trump won, and so that is weighing heavily on gold. Also, we've had some comments, and speculation that the BRIC nations and other nations that were moving away from the dollar are now going to embrace it because they don't want to piss off Trump because he's threatening all these tariffs. And so maybe because now we got, a new sheriff in town, that the move out of the dollar is going to slow, and that the central bank buying of gold, because if central banks try to be more friendly to the dollar to appease Trump, and hey, we're not selling our dollars, right? Don't tariff us. Look, we're your buddies. If they're going to stop that, if they're going to stop selling their gold, their dollars, they don't have to buy as much gold. So there's a lot of reasons that people are thinking, hey, this is going to be bad for gold. Now, look, gold went up by about 40% during Trump's first term, about 10% a year. And so it wasn't like, gold didn't do well when Trump was president. But I think it's actually going to do a lot better, despite what the markets are saying right now. I think the markets are wrong again on this. I think a Trump presidency is very inflationary, but that's not bad for gold, because the Fed is not going to fight the inflation. In fact, if it tries, the Trump administration is going to beat up the Fed pretty bad, and then put a lackey in there when Powell's term is over, if Powell doesn't cooperate, because Trump wants low interest rates. If you remember, when he was president the first time, he was very critical of Powell for raising rates. He demanded lower rates. He wanted rate cuts. He wanted negative interest rates. He was upset that Europe had negative interest rates and we didn't. He wanted more quantitative easing. And the only way to finance these tax cuts without skyrocketing long-term interest rates is to go back to quantitative easing. So I think that this is going to be an inflationary, 4 years. And I think the short-term impact of the tariffs, of kicking out the illegal immigrants and the tax cuts is going to accelerate an inflation that was already on the rise. So I think the dollar's rise is going to be short-lived, just like gold's decline. Now, by short-lived, could it go on for weeks? Could it go on for months? Sure. I don't know. I don't have a crystal ball as to when the markets are going to turn.
Schiff is certain inflation has become sticky, and the Fed will not be able to achieve its 2% target anytime soon. In fact, he believes the October CPI data, which revealed that the headline rate rose to 2.6% year over year and the core rate to 3.3% year over year, is a great indication of what's to come within the next year. More money printing, higher, more unsustainable debt levels, and general gloomy economic conditions. Above all, Schiff is certain that all of these factors will be great for gold and silver and contribute to significantly higher prices for both precious metals. Do you think inflation has become sticky and will continue to hinder meaningful economic growth in the United States? Please share your thoughts on Schiff's dire predictions for the US in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.